LBR LBO Debrief, Business Climate Outlook of 2016.
I think I'm going to take over the moderating the discussion, and I'm going to try and keep my opinion out of things, but I will say when I insert it, okay? I think we've had the chance to listen to two very good and different presentations on the budget, as well as the Prime Minister's policy statement. And Reyaz Mihula and Deshal Dimel have done the presentations. I want to create an opportunity for others on the panel to speak for maybe just 3 minutes of, 3 to 5 minutes, explaining some, their first reactions or something that they feel is important that they have taken away from the budget and the Prime Minister's policy statement. Let me begin by introducing others on the panel. Immediately to my right, we have Eteri Kavintadse, who's the IMF's resident representative, very difficult name to say, but we will call her Eteri, IMF resident representative in Sri Lanka. We have Amal Sandaratna, who is the CEO and founder of Frontier Research in Sri Lanka. And we have Dr. Nandalal Veerasinghe, who's the Deputy Governor of the Central Bank. So thank you very much for being on the panel. I will start with Eteri and ask her to share her thoughts on the budget from a macroeconomic perspective, really on the policies, and then give Amal and Dr. Nandalal Veerasinghe the same opportunity. Eteri, the floor is yours. Yeah.
Thank you very much for an introduction, and thank you for very interesting presentations. I think, as Desha said, it's an inspirational and aspirational budget in many respects, but devil is in details. And our job, I think, in this panel is to understand those details and understand how implementable this budget is and what's going to be macroeconomic implications of this budget. At the same time, I want to mention that this budget, in many respects, it's also a historic budget, and it was one of the most anticipated documents probably for past 18 months to 2 years, because this is a document that sets economic parameters for next year or maybe year after that. And that's something that was highly anticipated after a political transition by private sector, by investors, by general public, et cetera, et cetera. At the same time, it's also a very exciting document because it provides a lot of policy statements and a lot of new policy directions touching almost every sector and probably every individual. So it explains probably the length of the document and hours that were spent delivering it. But let me focus your attention on macro implications. I think one important aspect that I was looking in Desha's presentation in reconciling Prime Minister's statement with the budget was the directions that he has given in terms of fiscal consolidation, where he said that he anticipates that budget deficit will consolidate to 3.5% by 2020. Now, why that number is so important and why we are emphasizing fiscal consolidation? It's important because Sri Lanka carries high levels of debt. And it carries high levels of debt because that's how history went. There was a big war for a very long time, and there was a reconstruction drive which was mainly debt financed. As a result, we have high levels of debt. And we have to live with that, but at the same time, we have to be able to manage it so it does not become a constraint for future inclusive growth and social development. This motivates drive for fiscal consolidation because you have to be able to bring your budget deficits down so your debt levels come down and you have more space to finance your social and inclusive growth. Now, future attempts of fiscal consolidation were mainly done by expenditure compression. and quality of those consolidations were not that good because it did not emphasize revenue generation. Because there is no sustainable way to address your debt situation without addressing your revenue situation, because being able to generate your own revenues and being able to meet your own spending needs reduces your need to borrow. That's why these two aspects, fiscal consolidation and gradual reduction of budget deficit and increasing revenue generation capacity, is a railroad that will bring you to fiscal and macroeconomic stability. Now, on both of these fronts, we had very good sense of directions that Prime Minister gave, but looking and reading into the budget, we see that it does not propose fiscal consolidation in 2016, and in fact, 2015 budget deficit turned out much higher than planned, which is 6% instead of 4.4%. But somehow it escapes discussions. We could talk maybe later on about approach to credibility of the budget. Second thing is revenue generation. Now, as Desham mentioned, if you look line by line, you see that all of the main tax lines are going down in Ministry of Finance own estimates, and then tax revenue is yet projected to increase by 40%, and most of its increase comes from non-tax revenue, which increases by 300%. And that 300% increase is not really explained. So if you are trying to map numbers to policy statements, it's very hard to understand what drives that revenue increase. Correspondingly, expenditure increase is also quite ambitious. I don't want to discuss expenditure portfolio, but it results at the end of the bottom line of expanding budget deficit. So even if this budget is fully implementing, question comes to what it means to finance this larger deficit. It means that you will be borrowing more. It means that you will be accumulating your debt, and it means that your overall debt level is going to be increasing. Now, what it means from investment point of view, it signals outside world that you are finding your way through your development by borrowing, and with already high levels of debt, you are not addressing that fiscal vulnerability. And it raises a lot of questions in terms of pricing risk, how investors approach Sri Lanka as an economy, how you rank against other Asian economies. One important aspect that I want to also touch upon is how you evaluate your budget. I think it's very important that there is a public debate about implementation of budgets, and there are oversight mechanisms that question, for example, why 2015 budget target of 4.4% of GDP deficit has not been achieved. What are the lessons that we could draw from that, and how do we correct that? It's a very important debate because when revenues do not materialize, and if they do not materialize, authorities will be bound to cut spending or run higher budget deficits, and none of this is good. If they cut spending, that effectively you have unlimited room of discretion deciding which lines you are going to allocate your limited resources. And this should be subject of public debate and public approval. This is something that needs to be approved by the parliament and then monitored into implementation. That's why realism and implementability of budget is extremely important, because it empowers public oversight over public resources. I think second important aspect that needs more attention is tax expenditures. Now, what we mean by tax expenditures, those are tax holidays, rate reductions, tax exemptions. Those need to be quantified and presented for the public debate so people understand what are the leakages in tax revenues which are used to incentivize certain economic activities, and debate is this something that we want to channel public resources, or there are more efficient way to decide that? I think one small comment I want to also make on Disha's statement on digitalization and emphasizing that digitalization will help revenue collection. Yes, it may help revenue collection, but problem is in excessive number of exemptions, holidays, and rate reductions. I don't know how you could digitalize your direct tax code when it has 200 different provisions. Like if I am a programmer and I want to create a program, I don't know how I would be doing it. Or I would need to hire like lawyer, accountant, and probably technician to be able to file my tax return, which may effectively increase my tax filing costs and reduce it. So it brings home the point that you need to look on your tax legislation to clean it up and then digitalize it so it's implementable. And in that regard, statement in the budget that authorities are willing to look on the tax legislation from simplification point of view, I think is the right sequence to approach things. So you create an environment where digitalization and easing of tax payment is enabled rather than going other way around it. I probably exceeded my 4 minutes, but there was a lot to say.
That was very helpful, and I thought it really raised very interesting points that are going to create a lot of follow-up questions for, I think, both Deshal and Dr. Nandalal Veerasinghe. But I'll pass the mic on to Amal Sandaratna to share his thoughts before we continue. Yeah.
Okay. Thank you very much for this opportunity and for the introduction. So let me try to give you my feelings about the budget in particular and also the policy statement that preceded it. But I'm going to try to give it in non-economic terms, try to make it very simple and kind of bring it into what I do this sometimes. It's not exactly the same thing, but what I call it a corporate context of where we are. So, as everyone has acknowledged, the country with high debt, a dramatically higher repayment schedule, more than the total level of debt. And unlike many of the other speakers, I tend to worry a lot more about the short term than the long term. The long term, can make a lot of projections, but look, we got to deal with 2016. That comes first. What are we going to do about 2016 as opposed to 5 years, 10 years in the future? So that tends to be my focus, figure out a little bit more on the short term. So we are a country where rather than the overall debt levels, our debt repayments, which are coming due, have dramatically increased because of the debts taken on in the past. But compared to 4 years ago, our external debt repayments are probably 4 times what it used to be. Our level of reserves relative to these repayments are the metric, the external vulnerability index is one of the worst in the world. So that is the context you're coming in, and I don't now sometimes when I talk to audiences, if I was presenting, I don't sometimes need to even show the numbers or the charts because you find key politicians within the government also often in acknowledging the kind of economy they have even in the Prime Minister's policy statement, the level of debt, all these things are acknowledged, the problems the country has. So like I said, to put it in a corporate context, we are a country with debt repayment issues, high levels of debt. So what do? It's sort of like a new corporate management team has come into power to deal with this economy or this company, which has a lot of issues. And then in that context is where I look at the policy statement and the budget. What I see, is, as everyone said, a lot of good ideas, some bad ideas, where if they do implement the good ideas, can make a lot of differences. But a lot of them feel very long-term to me, that will deal with problems and solutions for the long term. What about next year? And that's where the whole concept of this fiscal deficit is. This deficit is as high as it was earlier, even on the numbers given, pretty much. And if, like we said, the revenues are higher than seems reasonable in the projections, you're probably going to run with a deficit much higher. And this is in a context that next year the available financing is less. So like I said, bringing it back to a corporate context, management team has taken over and come up, give them the benefit of the doubt with a good long-term plan. 5, 10 years down the road, the investments in education, training, whatever, is going to pay off. But what about this year, 2016? What are they going to do? There is no difference to the operating losses, so to speak, or the negative cash flow this company, in this case the economy, is facing. How are the lenders going to feel about it? And that's where the biggest risks fall, because unlike earlier, when we got into these problems, the situations, every time, as Nishant said, when the sarong got a bit loose, we are far more vulnerable to external forces, rating agencies, international investors who have pulled a lot of money out of Sri Lanka. And not necessarily only our fault, because a lot of money is getting pulled out of emerging markets, but that is a factor to keep in mind. And again, it's good the Prime Minister, and post the budget, in the recent statement he made, I think a couple of days ago, talked about the external risks. So it's like with your sarong a little bit like loose, there's a lot of wind, and you have these external parties that have been holding it up who can kind of pull it away. Okay, that's kind of the situation. So this is the, so the question is those external parties, rating agencies, foreign investors, how do they look at this? And that's very important because they are actually funding us. When we try to raise more money with sovereign bonds, all these things matter. The money that's coming to T-bill and T-bond markets. How are they going to look at a situation where you are running the same level of losses as you used to be, but promising that in the future we'll get it down and we have good policies and things will be better 5 years, 10 years in the future? Are they going to take it as credible and be willing to keep funding in a much tougher global environment for 2016? Is that going to be good enough? And that's why I say, bring it to a corporate context. You have to restructure a company in trouble. Are you going to just accept a long-term promise, or do you want some tough actions taken now? So that's the kind of question I sort of leave with you. And that's why I am actually quite worried about the economic situation for 2016. Whatever happens in the long term, whether these long-term ideas work or not, 2016, the question is it credible? And that's where the whole concept of deficit is. And you've seen the rating agencies starting to, in their kind of language, saying they are not very happy. And you see even the more positive international banks who are writing reports on the economy, post the budget, they were the kind of more optimists. You could see that their tone has changed. And here, that's where the deficit comes in. And that is a very significant worry that fiscal consolidation is not coming. And these lenders, the people holding up our sarong might get a bit worried, and it can be a little bit difficult. So I leave you with that.
Okay, so we're going to move on. I'm going to ask the audience to promptly, delete that sarong image from your minds, okay? So we can continue with the discussion. Thank you, Dr. Nandalal Veerasinghe. I think you have a lot to respond to today, and thank you very much for taking the time and the trouble to be here with us. And we'll give you the floor initially to share your thoughts. Yeah.
Thank you. First of all, thank you for inviting me here. I think like last year, I am here again this year. First of all, I have to tell here, I'm not here to defend the budget because I am a central banker. I'm here to defend whatever we are doing as central banker. So for the budget and the Prime Minister's statement, we have our own independent views, and we already express and we give it openly and also internally. Let me just start with where Amal raised a very important point. Whether this, to me also, looking at some long-term really good measures that Prime Minister mentioned in his statement, visionary statement, that a lot of good things were mentioned there. And then what we expected in the budget was that the kind of mechanism to move towards that direction and then have a clear workable plan to go towards those targets on a gradual basis by 2020. In fact, if you compare those two statements, I don't see, a lot of speakers here mention the fact that they are not really consistent in terms of what Prime Minister mentioned in his vision statement, and then what are the mechanisms to go through that line and achieve what has been mentioned there. First, let me start with the fiscal consolidation, as already Etri talked about. One of the, even the previous governments, one of the mistake I think they also did when it comes to taxes, they rely more on the expanding the tax base with the expectation of more people are coming into the tax net, and so tax collection would be larger, and they brought down the tax rates. This is what they did in 2011. And then after 2011, tax rates were simplified, brought down, but results were disappointing even after 3, 4, 5 years. Now this budget has done the same thing with the expectation of results will be much more ambitious within 1 year. So this is the issue, I think. To me, if all our taxpayers here and all Sri Lankan people, if they were not able to pay more taxes, even after bringing down taxes back in 2011, after 4, 5 years, how come they pay 40% more taxes within 1 year after bringing down, and especially personal taxes, corporate taxes, plus removal of wholesale and retail out of the VAT net, instead of one VAT rate having three VAT rates. So for that to happen, realistically, I think I have a lot of sympathy towards the guys, my colleagues at the Treasury. As Finance Minister, Honourable Minister already mentioned, if they can't deliver, they will be sacked. So I think there are a lot of challenges for these guys who have the responsibility to implementing and delivering the revenue targets, expenditure targets, and how that can happen is going to be, to me, is a very challenging task to deliver the numbers that has been incorporated in this budget. Especially revenue, even the expenditure, if you look at the public investment, 800 billion investment, do the government has a administrative mechanism to spend that amount of money within 12 months period? So even last 2015, the 4.4% budget deficit ended up going to end up at 6% of GDP, 1.5% slippage, even with additional one-off taxes coming and also lower public investment. And in 2016, what we expect here is to have a lot more revenue collections, even without one-off taxes. And then all technology, all the new measures will have to kick in from 1st of January, and there will be a revolutionary approach in people should be coming and willing to pay more taxes, 300 billion more within a 12-month period than what they have been paying. If that's going to happen, in fact, I'm concerned that will be a very tight fiscal policy. If people are going to pay 300 billion more taxes than they paid last year, it will be fiscal tightening. Anyway, this expenditure is not going to happen. Public investment, recurrent, will be there because there's already the public sector wages, salaries, pensions, subsidies, everything has been increased, and then have been increased. So there's very limited space in the recurrent account, and although it says 0.7% of revenue surplus, and hopefully, if that can deliver, that's good. I think my concern is that if that is not delivered, we'll end up in a much more worse situation in 2016, which means the government will have to borrow more. So that is a challenge. Even now, they talk about the debt service payment whether it's going to be too high, and cost of borrowings is going to be too high. It's already high. Then deficit is going to be from 5.9%. If that's going to be higher, then the financing, based on the estimates, there's a large amount of financing going to come from the non-bank financing sector, not from the banks even. That's a good for monetary policy. If the government is going to borrow less from the banking sector, that's good for the monetary policy. For us, it's easier for us to implement the monetary policy and maintain interest rates. But do we have resources in the non-bank sector to finance this kind of budget deficit, as even envisaged in this number? That's a challenge. And if that is going to be the case, then interest rates will have to go up because the government will have to, or the private sector will have to crowd out. So these are the challenges. And then we look at the external borrowings. So external also, now there's a lot of external borrowings coming up. And already for next year, there's a requirement of 1.5 billion commercial financing coming from the markets. Now, I can remember that in the last year forum, these concerns were raised, especially the Nishan very excellent prediction that he made was that based on some analysis, Sri Lanka's risk premium was going to be increased. He made the prediction last year. In fact, now we are having a highest ever risk premium this year. So he was right. Our risk premium was rising and it has already risen. And if the deficit is going to be more, and if the government will have to go to the international markets, so what kind of risk premium we have to pay? So would that reflect the investors' perception on Sri Lanka, investors' willingness to invest in Sri Lanka? Has it already improved or worsened this year? And from this point, I would like to pose this question to Nishan. What is your view, based on your analysis, what's going to be the risk premium for the next year and going forward, based on the investors' viewpoint, looking at the budget? So I think I appreciate his comment on that regard. So these are the concerns that we have on the overall macro side. And apart from that, if you look at the banking sector, the financial sector, because I will just mention a couple of things. One is the 100% deposit guarantee to the finance companies. Now, finance companies are going to have a deposit of about 500 billion rupees. So we central bank have the capital all about 80 billion. So who is going to take the liability? So isn't there going to be a moral hazard issue where central bank is supposed to give a 100% guarantee to finance companies of 500 billion deposits? Then if people believe that, a lot of commercial bank deposits will be moving into finance sector, and there are certain weak companies, there's a moral hazard issue. They can do whatever they want because back on the government guarantee, and then who's going to pay the liability? Obviously, central bank would not have that capacity because we have limited capital, and this government will have to come in and rescue or bail out the central bank. If that is the case, there's our concerns. And the leasing business, taking out of the leasing business from the finance companies. Who is going to finance the large kind of corporate customers' leasing requirement? Can the finance companies finance this? The big leasing. Who is going to pay higher cost for leasing? Is good for the business. And also the tax on the deposits, withdrawal. Riaz made a very nice point. At least if that can be claimed back, and that would be a nice thing. Otherwise, who would want to pay some taxes for taking my own money out of the bank? And these are kind of issues, I think, at some point, if you want to move forward and in the right direction, as Prime Minister mentioned, we have to change certain things. Hopefully, I have seen already there's a willingness and pragmatism about that. Already there are some changes that, unfortunately, that has come from the part of political pressures, vehicle permits to the public servants. I think that's a right decision that was withdrawn. But again, now it's coming back. So likewise, we have seen the willingness to do right things, the changes. That's a good part of the process that I have seen. Hopefully that will continue, and all changes will come in the good part as well. Let me stop from there then.
Thank you very much, Dr. Nadalal Veerasinghe. That was really great comments.
LBR LBO Debrief, Business Climate Outlook of 2016.